This video chart presentation of Harte Gold Corp. Harte trades on Toronto Stock Exchange, our ticker HRT. Doing some scans this morning. Pretty much throw the proverbial rock and hit a beaten down TSX listed energy play or gold miner. We picked this Harte chart because you can see, looking back historically, a strong support level at a nickel. Here as the stock has slid from highs of 34 cents in the first days of August, fallen all the way back down to that support, but holding it. Closed up 9% on Tuesday at 6 cents. Volume was actually pretty light at 188,000, but for starters, it is another holiday week. And down at these levels, expect to see a little bit of caution with people trying to sell off. That's not to say it can't break through that 5 cent mark and make a new low, but we read that more as a little bit of an optimistic sign. And we'll know more next week when trading volumes start to pick back up to normal levels, that maybe the selling is coming to an end. Now again, there's resistance in front of it. But as long as this support stays intact, this is a chart we think is worth keeping an eye on for a bottom play. Now as always, we take to the MACD, see if we can gauge any sort of trend movement. And it is rising back towards that center line. Needs to break back above zero and go into positive territory to lend a little bit more strength to the idea that the bulls are trying to come out to play. But the push right back towards zero is now at least a pretty neutral reading. And that goes right along with the idea stocks is trending sideways and holding that support point. Now looking at the slow stow and the money flow index, which give a couple different views to the momentum. You can see the slow stow has been holding beneath 50, a sign there's just not any bullish momentum really happening. But this push back towards 50 right now, again, just lends a little bit to the idea that some upward pressure is trying to build. Same way with the money flow index, primarily for the last 2 months, been trending beneath 50, just now poked above it. You can see the 14s at 58.5. Still pretty neutral and nothing to jump up and down over. You can see right through here. Stock tried to make a little bit of a move. Money flow index moved to the upper half, then promptly pulled right back down, and there goes the stock price. So we don't go too crazy over the idea that's on the upper half of the indicator, but it is an early on sign of potentially some momentum building. Most people typically look to the relative strength index for momentum, and you can see what's been going on there ever since falling from those highs back in August. Once the relative strength index broke beneath 50, stock price has been falling, at least flattening now. You can see as it's flattening, RSI is starting to climb a little bit at a time, making slightly higher highs and slightly higher lows, lending very early on hints that potentially some momentum is building. It's those type of things that we look for, try and glean a little bit of information about where the chart's potentially going. It always comes down to the candles and support and resistance points, but it's worth taking a quick look at those indicators for any type of hints. As I mentioned, for us, this bottom support at a nickel is about the most important thing for this chart. If it breaks below that, you can see there's no support in sight. It may get a bounce right back up above it, but from a technical trader standpoint, if that falls, it's time to walk away from the play. That's a key support level and it's been broken. Technically speaking, it should serve as resistance if the stock price tries to bounce back upward. So that would be a clear defined breaking point for us. To the resistance side of things, I'd really have to zoom in here to show that there is some resistance at 6.5 cents. But I think the resistance is actually a little bit stronger at 7 cents. Right through there, as back in October it was a support point, then it turned around in classic TA fashion, started serving as resistance. Stock price hasn't closed above that now in a couple months. So I'd look for the 7 cent mark to become a resistance point. Then above that, it's going to be some more around 8.5 and this 9 cent high. But I'd look for this dime mark to become a pretty tough spot in general, with another primary resistance up at 15 cents. I'm not going to even bother drawing that in. Stock's only at 6 cents. That's too far ahead to be looking. We always tend to stay near-term focused, and that means the support staying intact. Then after the first of the year, as traders return to their desks, see if volume starts to pick back up, see if you see more buying pressure come in, see if the 7 cent mark can get taken out, see how the stock reacts up around 9-10 cents. Those are the type of small things that we look for, because ultimately what we're looking for is a pattern of higher lows and higher highs coming off a bottom, and to see traders trying to accumulate positions down at a support point. So going forward, those are the type of things that we're looking for in the Harte Gold chart. But as always, it's merely my interpretation. I'm not a financial consultant. Strongly encourage you to do your own proper due diligence. Consult with a qualified financial advisor before making any investment decisions. Past performance is not a guarantee of future results. Please visit the allpenny-stocks.com website to view the full disclaimer and disclosure, and do not base any investment decisions upon any material found on the website and/or its video chart. No person employed by All Penny Stocks is a registered investment advisor or licensed broker-dealer. Thank you for watching. Trade smart.